Morning, Mr. Kedia. Nikunj also joining in. So, Mr.
Hi,
Kedia,
Nikunj. Hey,
when we will
badhai
look
ho.
back, 50,000 may just look. I'm not feeling the zing in your voice.
अरे अभी मैं फोन पे
आपकी
कैसे
आवाज में गर्मी
चिल्लाऊं
क्यों नहीं
यार,
है
ये
आज?
बता मेरे को। अभी आप बुला स्टूडियो को, फिर मैं देख कैसे हिलाता हूँ सबको।
Nene, please come. We will. You're more than welcome, and I look forward to have you in the studio very soon. So, 50,000, Mr. Kedia. I'm sure it looked like an impossible number. Forget 10 years ago, 15 years ago. In March, when markets fell, nobody would have thought that we will see this number so soon.
Yeah, that is the beauty of market. No, market always surprise you. You know, markets का यही तो problem है दोस्त. You find the gold where you don't expect, right? It is like कि आप coal mines में you are searching for diamond. So this is what market teaches us, that nobody is educated enough to read the market. And market and this is the beauty of rising economy, and this is the beauty of India, यार. You know कि मैंने आप इसके अंदर में जैसे रिमेम्बर माई ओल्ड सॉन्ग कि इंडिया को शॉर्ट किया तो गॉड भी ना बचाएगा. दैट मीन्स व्हाट लॉन्ग इंडिया यार. तो दिस इज व्हाट वी हैड बीन लर्निंग सिंस एवर सिंस वी आर इन दिस मार्केट.
चला दे जरा. Kedia, we've got the song ready which you had in a sense written and sung for Sensex at 50k. Before I go to Sandeep Tandon, let's hear out that song. It's a day to celebrate. Sensex 50,000.
आए हो मेरी जिंदगी में 50,000 बनके. आए हो मेरी जिंदगी में 50,000 बनके. आए हो मेरी जिंदगी में 50,000 बनके. अब देर ना लगेगी, हाय अब देर ना लगेगी. 1,00,000 बनते आए हो मेरी जिंदगी में 50,000 बनके.
Now, Sandeep, Sensex at 50k. I want a reaction, and let's get some reaction which captures the mood and the kind of rise we've seen.
Good news is that, despite the Sentex's lifetime high, okay, the risk appetite and liquidity still are rising, which is a very positive news for India. So it's not like that it's peaked out from a longer term perspective, and old majority of the market was very disturbed in last many days that since markets are peaking out, So it's a good news. If you recollect, like in the month of March 2020, we talked about that, risk appetite was the lifetime low and rising, and liquidity was lifetime high. That was the lethal combination for a bull run. Okay, and it has played out very well. And the good news is, again, I'm repeating that the Indian risk appetite is still rising as compared to developed market, which is like some sort of exhaustion we are seeing. So there's a possibility, and so is the case with emerging market also.
Indeed. Sandeep, all the naysayers are wondering how much more steam to go. Vijay Kedia believes that we will hit 1 lakh on the Sensex in the next 10 years itself. Do you also believe that, the bull rally from the March lows has just begun and the market has further miles to go? We're not at the destination, 50,000, but this is just part of the journey and one of the milestones.
I will look at much larger perspectives. We've been talking about that the next 10 years belongs to Asia and Asian-centric emerging market. And this is what we have been saying from March. That's the new trend has begun where emerging market has potential to outperform the developed market. But keep in mind that entire move will not be linear. Okay, so you will see sharp corrections in the market, and which I expect maybe post-budget sort of thing, market can correct, maybe budget could be a trigger, because globally also risk appetite, as I said, for the developed market is peaking out, which is clearly reflected in the Bitcoin, the way it peaked out, and we have seen a sharp correction. Okay, and similarly, we are seeing some signs of complacency across US parameter, which we track very closely. So some early signs of disturbing from the dollar index. We talked about in the first week of January, the dollar index at the cusp of inflection point. Since then, it has rallied a bit. So right now, I think it's a consolidation. But keep in mind, from a very near-term and medium-term perspective, dollar has potential to rally further. Okay, and that will not be a good news neither for emerging market nor for India. So as of now, it has not completely reversed. We have seen one uptick and some amount of consolidation. And the bad news is that there has been a consensus trade. Now the dollar has peaked out and it will keep on correcting and keep on drifting. When we used to talk about in 2019, the 2020 will remember as a top for the dollar. Okay, that time consensus was not there. But since I'm reading many strategy reports in the beginning of the year, the global consensus is that dollar will correct further. Okay, I'm not looking from a very near-term perspective that correction. In fact, we have a contra view that maybe for next maybe a quarter or two, dollar has potential to reverse, which means there will be bouts of volatility which can come back to emerging market, including India. So don't expect a linear move, which we have seen so far from March till now.
Sandeep, the first rally in the market was led by IT and financials, IT and pharma. Now it is back to value, which is PSU, industrial and cyclicals. So let's say if markets have to go from here, what will be the engine for this market? What will be driving the markets higher?
If you look at from a very near-term perspective, we have very important event, which is budget on 1st February, though the expectations are very muted. But typically close to the budget season, we have seen infra stocks moves up, okay, and certain value stocks also moves up. So we are in that phase right now from a very near-term perspective that these stocks are rallying. But if you really ask me from a longer-term perspective, if I look at for next 2-3 year perspective, our view is that growth has peaked out globally, okay, and they're in the final legs of peaking out. Either they have already peaked out or they're in the final legs, and value will come back, okay. Given the long-term view which we have a constructive view on commodities from a longer-term perspective. I'm not talking about just 1 quarter or 2 quarter perspective. If I have a 3-year horizon, then commodities we are more positive about emerging market commodities, which is the endorsement for our value stocks. And globally, I expect lot of fiscal stimulus will also happen, which is also inflationary in that sense, but it will support the value stock. So as a theme, I will like to continue to remain overweight in these value or so-called what I define from a behavior perspective, the neglected territory. These stocks have reached the neglected territory. Like I was quite bullish on in the month of September, we used to talk about metals in a big way. Okay, and you've seen what sort of performance metal stock have given, cement has given. So I'll remain constructive from a 3 years perspective, but I always want to reiterate that nothing will be very linear. So you will see bout of volatility, you will see steep corrections also, because we believe our predictive analytic tools are endorsing from 2018 till 2023, the employed walls of global asset class will remain elevated from a longer term perspective. So and hence you have to trade in these themes also.
Of course, absolutely. From the latest set of earnings, Sandeep, they do seem to be a little above expectations, and everyone's been watching out for that low base effect to kick in as well, expecting earnings to deliver. I mean, how are you reading into the trend? Any pockets that you're concerned about or waiting to see, what indicators they actually portray, for instance, whether it be financials or otherwise?
So maybe this earnings season will also end closer to the budgets around the corner. So I think there's earnings related momentum which we have seen, which has led to some amount of positive surprises rather than negative surprises. I think that the session is about to end, And our view is that from a longer term perspective, we talked about pharma as a theme, IT as a theme. I think these two themes will continue from a longer term perspective and will be getting support from the value stocks or neglected stock, which I talk about. So I think from next 3-year perspective, the theme will be neglected territory, beaten down names, under-owned stocks, undervalued stock, under-researched stock, as compared to most admired category, which was the theme from 2013. Okay, most expensive stock, most admired stocks, or if I have to call it, Nifty 30 stocks, Nifty top 10 holdings have done extremely well. It was very skewed rally which we have seen from 2013 till early part of 2021. I think that momentum will decline. So the most admired category is something where we are extremely cautious and pruning down our exposure.
Okay, so does that mean higher quality mid caps, or does that mean sectors or pockets that you feel have been ignored?
So we always give more weightage to the sector as a theme. So if I feel like IT or pharma or some value as a theme, I think then these stocks within the mid-end space also will do very well. Rather, they will outperform the large cap. So we always believe that if risk appetites keeps on rising, which has been the case from March 2020, then mid and small has potential to outperform the large caps. Okay, and that's a theme has done well in last many months. And given the global background also, we believe that value is coming back, which means that mid and small have more potential to outperform the large cap both from medium and longer term perspective. But I always say with a caveat, don't expect a linear move. So it won't be linear. There will be phase where mid and small after meaningful upside have potential to underperform large cap. That's a cycle which will keep on playing out from next 3-year perspective. But relative basis, we are more convinced about mid and small because we still believe that these are the sectors or the indices which has underperformed badly, and they from 2018 has underperformed significantly. So it's their time now to look therefore like to keep a more positive bias for this space as compared to large caps.
Right. Sandeep, enough of the academic talk. Let's get a little, emotional here and tell us a little bit about how the personal journey for you has been tracking all the Sensex. Any historical moments, anything that's been most memorable when it comes to markets and etched in your memories? Vijay Kedia was saying that he was there at the Bombay Stock Exchange when the Sensex hit 5,000 for the first time, and they said that, they had 5,000 balloons lighting up the BSE. Anything that you can tell us about how your journey has been tracking the markets?
So, I'm not from Bombay. When the first time I came into Mumbai, in those days, Bombay was 92, 93, and being to that old ring in Bombay Stock Exchange. So it's a very, interesting moment. We have seen the changes happening from those days. I was closely associated with the Badla market and try to learn how to read the Badla rate from the behavior perspective. And that was one of the early benefit I got when I started early in the derivative space. So it really helps, old traditional things, what Indian market has built. And it is very unique and very different. So it's a learning. I don't have any specific moment, but obviously we are all passionate and looking forward for a much more milestone which Sensex will achieve in over next 10 years' time.
Yeah, indeed, and glimpses of which some of us have only seen on the very recent OTT series as well. But Nikunj, you also have seen The Ring, right? Okay. Okay, I'll go to Nikunj in just a second and get in his memories of the Bombay Stock Exchange. But a historic day nonetheless. We're going very, very strong for the markets this morning. You're holding very steady, 14,700 on the Nifty as well. And it's a great strength across the broader market. I know we've been caught up talking about the Sensex, but one has to pay heed to what's happening within the broader universe as well, because you've got more than 100 stocks standing to the green within the F&O universe. Bajaj Finance, irrespective of the mixed bag, the numbers are Bajaj Finance holding up very strong. Bajaj Finserv in tow, 4.25% move there as well. Apollo Tyres, Voltas, Havells, these are all names which are contributing to today's move. Reliance as well for a fourth consecutive day now, holding up 2% as we speak. IndusInd Bank, HCL Technologies, Tata Motors, UPL, Eicher Motors, Shree Cement, Axis Bank, Titan, they're all holding out very, very steady as we speak. Reliance, of course, was part of the formative Sensex names as well and continues its journey. Today standing at 2,000 plus per share mark. But that said, Sandeep, what's the journey from here going to look like? You talked about that we may see volatile bouts, not just for us, but the emerging markets as well, purely because of how the dollar-rupee parity is going to pan out. But how tactically, do you need to protect capital right now, or would you say this continues to be a buy on decline market? Whatever given dip, just buy it.
So, just to give you a much larger perspective, we have been talking about that 2020 onwards till 2028 or 2030 will be the most challenging environment globally. What I call it will be a wealth destructive phase. We have seen one round of massive wealth destruction and then we have seen a recovery. Our view from a much larger macro perspective, which we track, which is based more from the Earth Analytic point of view and the global equity, which is pumping up, we believe that bubble is getting built in many pockets. And our worry is developed market, our worry is US market, and anything which is related more from a US perspective, that is the biggest worry. Okay. The way we look at that, whenever market peaks out, let's say in the beginning of this quarter, or maybe in the February onwards, let's say post-budget, which at least I expect there will be a correction in the markets, okay? At least I expect maybe 2 quarters of possible correction globally can happen, okay? But if I have to look at India and emerging market, particularly Asia-centric emerging market, has potential to de-link from the US market, okay? So if I have to have a 8-10 year horizon, we are extremely bullish from the emerging market and India in particularly. So definitely India buy on dip strategy will be very, very effective. But we have to keep in mind that in a larger perspective, we are talking about a very volatile phase, what we call defined as a volatility expansion phase. In this phase, the traditional style, traditional approaches, traditional thinking will not work. Okay, you have to manage and protect your wealth with more agility, what we describe as a dynamic way of money management. And I think the agility will really help us in accepting the changes which is happening globally. Okay, and people who are willing to adopt these changes will be more successful as compared to traditional thinker. So I think 2020 has taught us a lot of things, and I think even from the money management perspective, a lot of things will change going forward. We are extremely bullish on India, but we have to keep in mind nothing will be very linear, and one should learn how to capitalize these bouts of volatility, which I generally talk about. Most of the investors are generally don't like volatility, but in my nearly 3 decades of experience, we have learned that volatility is very, very important, not only from the forecasting perspective, is how well you capitalize on these bouts of volatility in your benefit. So I think that's something which most of the Indian investor has to learn a lot. People generally get scared. We have seen extraordinary panic situation or extraordinary euphoria, which happens in emerging market or India as compared to emerging market, as compared to developed markets. So we have to learn how to manage volatility. I think that will be very, very important. And once we understand how to manage volatility, these bouts of fear and greed, which keeps on appearing, we are able to capitalize this rally much better as compared to traditional approaches.
Okay, Sandeep, great to have you on the show today and share with us all the excitement and enthusiasm and this history which has been created. 50,000 on the Sensex, believe it or not. By the way, going great guns for the Nifty as well. 90 points higher. Broader markets as well are chipping in very smartly. Voltas, Apollo Tyres, Havells, United Spirits, Siemens. That's your big contribution from within the broader universe. In fact, to mark this occasion, who better than investor Rakesh Jhunjhunwala sharing with us his thoughts on the bull rally.
All four play upon each other. Government spending affects capex, consumption leads to capex, capex leads to consumption. So I think all pillars of the economy will improve according to me, right? And we have bottomed, I have no question and no doubt about it.
When we met last in the month of August, your view was that markets have bottomed out, economy has bottomed out. Post that, markets have rallied, at least benchmark indices have rallied, and economy we can argue whether it is good or bad. There are some green shoots, but there are some, there's some bad news also.
So see, for the kind of fall we have had in the economy, we are not going to improve in a day. And the green shoots in the market, what is important is that the breadth of the market in the last 2 months is far better than what it was earlier. What is important, not only markets have improved, but even the participation in the by breadth-wise is much better. And the economy is not going to turn itself in a day. It's a slow process, it's going to take time, right? But it's not going to, it's not as pessimistic, there's so much pessimism. Well, the chariot is upward, where it will reach, I don't know.
Both for mid-cap stocks and large-cap stocks?
I think especially for mid-cap and large and small-cap stocks. I think they will outperform.
In 2018, your words were that market भूल गया है कि mid cap में 30-40 का P multiple क्या होता है. Can I say the reverse of that in large cap stocks now?
No, I won't say that. See, a lot of large, what has happened, there are few quality stocks in India. Now, they have always been expensive, but every time you sold, they got more expensive or the prices went up. So I think there is an initial, the initial hesitation to sell. And see, this happened in America when there was Nifty 50 in 1971, 72. Even this will correct itself. But it's not.
Ravi Dharamshi also joining us now. Ravi, good morning. What a marvelous day. 50,000 on the screen. And the kind of pace with which we've reached here, that's really what everyone's focusing on, wondering how much faster we're going to move after this particular milestone.
Yeah, congratulations to you and congratulations to all the viewers who have exposure and are invested in the markets. And it is definitely a wonderful milestone. I used to think that this is more symbolism. How does any kind of a level really matter? But I think at times like these, you guys need to make a lot of noise so that people become aware of equities. It is quite sad that despite the kind of wealth creation that has happened in equities, not many people have benefited from it. There needs to be far more participation from the people at large in India and benefit from, I think, what is one of the really last bastion of capitalism, where you can make your money work for you and actually gain your financial freedom.
Absolutely. Ravi, in the next leg now, what do you feel are going to be some of the key trends in terms of the makeup of the Sensex or the Nifty, the kind of contributors we've had? It's been a complete sea change in the last year, what we've seen during this pandemic. What do you feel will be the defining trends going forward?
No, I think the leaders of every bull market are different. They keep changing. There are certain constant companies which keep kind of reinventing themselves. But apart from that, very, very few companies last beyond a couple of decades in the top decile. So you have to figure out which are the companies that have a business model that can reinvent itself, has a culture that can survive the ups and downs, has a balance sheet that can survive a downturn, and they are gaining market share, are constantly expanding their addressable opportunity. So there are very, very few companies that do that, but even some companies that do not manage to do that, they can also be very good wealth creators in a transitionary period. So having said that, I think clearly the new wealth creator are the digital companies going forward. That is where the world is heading towards. The world is being eaten up by software, and that software is being written in India. And now there are new business model innovations along the digital lines. There are platform companies, and they are in a category where they have kind of a winner takes all kind of economics. So there will be few large winners even out of India. Over the next 3, 4, 5 years, I think a lot of these companies, the new age business models which are in the private domain, will get listed on India, and they will look expensive. And but I don't think they'll get too much cheaper from where they list.
You know, for a retail investor, Ravi, I mean, what's the difference now in this bull market? I mean, there have been periods earlier where perhaps a retail investor was, afraid of getting their fingers burnt. But today, the market seemed to be the forefront choice when it comes to an asset class, when it comes to investing. And, we do seem to have matured quite a bit. So what does a retail investor really have now to look forward to going ahead?
The first thing that any retail investor needs to do is make sure they have an exposure to equities market, whether it is through DIY, whether it is through mutual funds, whether it is through PMS. If you do not have the capability to understand the markets or react in an opposite manner to the emotions that market throws up, then you give it to a professional who can do it for you. But having said that, I think there's been a wonderful innovation from the mutual fund industry of SIP. And if you can see, the SIP flows have been very, very steady. That takes care of the, emotions that market can bring out in you. So SIP is definitely one way for retail investor to go by, where constant flow of money can keep pouring into the market. And it is not a 3-year, 5-year product. One needs to understand it's a 20-year product, and magic can happen over 20 years when you keep putting small amount of money. I think in a 20 years time, we can have a great, huge banyan tree, which will keep giving fruits for a long period of time.
Okay. We've been asking everyone, Ravi, in terms of their highlights or memories, significant moments they remember, in the last few years or many years that you've been investing in the markets. Anything you'd like to share with us as we hit this historic milestone?
No, so it's been a topsy-turvy and wonderful journey. I mean, I cannot put it in words, but the excitement, the palpitation, the downs. I mean, there was a time when everybody was down in dumps, and I cannot highlight mine, but one particular instance clearly comes to my mind is in 2004 when NDA won, government lost, and the market was down, limit down 20%, and that was my first experience of what can happen in the market. And of course, then it kept on getting repeated a couple of times on the upside as well as on the downside. But can't forget those times when, it's like what Mike Tyson says, everybody has a plan until you get punched in the face, and market keeps punching you every time and again. And you have to figure out how you're going to handle those punches. But if you can handle those punches and come back, then market is going to be very, very rewarding for you.
Ravi, did you see this level of 50,000 coming in? Like you were just pointing out your memories of the Bombay Stock Exchange and of 2008, or for that matter, the many downs and lows that the market as well has seen. Did you actually anticipate that we could see 50,000, especially in a pandemic year, come back so quickly from the March lows?
No, absolutely. I knew it was going to happen on 21st Jan. I'm kidding. No, there is no way. I would have thought that we are going to hit 50,000 at the beginning of this year. Yes, there was a strong belief that we are going to do way better than what most people are expecting. But the kind of surprise and the kind of up move has surprised even the most optimistic one. And the good part is it is not only purely speculative. It is backed by some earnings upgrade and some economic revival. So that gives a lot of confidence that there is a floor at some level. We are not going back to the levels that we saw in March. whether that floor is 10% lower or 15% lower. But that is what gives the confidence that, invest at this point of time. If it does correct, invest more. That's the only way to, overcome this fear, or whether it is fear of losing out, or whether it is fear of, correction that's coming up ahead. You have to spread it out.
Yeah, indeed. Ravi, there are still a lot of naysayers in the market. Part of the market also believes that that's the reason that we will see much higher levels. Many are in disbelief from the kind of recovery that the market has seen from the March lows. Just one message out there to the retail investors, those who haven't quite cherished or enjoyed or even participated in the rally that has played out from the March lows. What would you tell them?
I think the first thing to do is just get some exposure. Do not worry about the correction. Do not worry about timing the market. I think if you and have a longer term horizon, if you can think in decades rather than in months or weeks, then you will be way better off. You will be, as we can see, the first in 1979, Sensex was 100 and it went to 1000 in a matter of 11 years. That is 10x move in 11 years. The next 10x move came in 16 years. And the next 5x move has only come in about 15 years. So since 2006, and we are in 21 already, we have only moved up 5x. So I would believe that the next 5 years are going to be way better than the last 5 years in terms of market returns, in terms of economic performance as well. So do not worry about the correction that is coming. There will be a correction. There is no way you can avoid it. Only people, those who can avoid it, are fools and liars. Those who want to avoid it, it's okay to live through the up. If you want the market to reward you with the best, then you have to face it at its worst.
Ravi, stay with us. Lots more to chat about. We've also got Madhusudhan Kela joining in on the show. Madhu, hi, good morning. What a day this is turning out to be. 50,000 here on the Sensex already. How does it feel, especially that we've managed to do it in a pandemic?
Absolutely. First of all, congratulations to all of you. I think you guys have played a real, absolutely pivotal role in this journey. And what a satisfying moment for people like us also, seeing from 3,000 to 50,000. And Aisha, there's been so much doubt which has been carved on the India story from time to time. But ultimately, people like people like us who have been really optimists have been able to make the most out of this growth. And what a moment to cherish! Really, 50,000 in front of my own eyes.
Indeed. Madhu, you've been an old hand in the market and you always were fascinated by it. We all know as a teenager yourself. Give us some memorable moments that you have had at the Bombay Stock Exchange. I don't know if you were there when we still had the ring and the Badla system. Any memory that comes to your mind that we are rejoicing 50,000 right now?
Yeah, what a question you asked, Aisha. I think, I remember my early days of the stock market when I was even studying and I just started working. I remember, I used to come to the ring. I did not ever go to the ring as a sub-broker, but I used to come to the ring to place my 200 share order with a sub-broker and used to wait with breathlessness that, when he will come out and he'll confirm to me that my shares are being bought and sold. This is only 25 years ago, and what a transformation it has been for India, for all of us, for the stock exchanges. So I still, it's so nostalgic to remember those days. What a journey it has been. All I can say, it's been a very satisfying, very fulfilling journey.
Madhu, from someone who had big dreams in his eyes when he came from Raipur all the way to Mumbai to make a career into stock markets, what is it that you would like to tell all our retail participants, young aspirants who see the news daily, read the papers daily and see the markets going higher and higher? One message to them to follow their dreams and have the faith in India and have the faith in markets.
Yeah. I would say only two things. One, if you want to really make a career in the stock market, I'm here to congratulate you. I would say that you have just made the right choice. It doesn't come easy. However easy it may sound from outside, but it is a lot of hard work, a lot of intelligent work, real passion. This is not a field for people who are looking for 9-to-5 engagement. But if you are really passionate, if you really want to do something in life, if you really feel that you want to devote your life to something, then this is the business, this is the field. So people who are watching me, young aspirants, there is not only one Rakesh Jhunjhunwala, Radhakrishnan Damani. India will see many, many good investors over the next 10, 20, 30 years. And it is not that we are done at 50,000. Still, there is a long way to go in terms of wealth creation in India. So if you choose this career with passion, with devotion, it is extremely rewarding. The other point for investors is that keep up the faith in the India story. There is going to be ups and downs. There are, like this year, we have seen doubling the index. There will be a year when you will be down 20-30% also. But the people who have had faith and with faith, who have carried on to this story, and people who have done diligent work on the companies they invest. So I'm saying keep up the faith in the India story. Don't go by tips. Do your own homework. Make sure that you are absolutely diligent about the company you're investing in. Have a horizon for investment. And it has been extremely rewarding, and it is going to be this way, at least for the next 5-10 years.
Madhu, while we all knew 50,000 was coming soon, but nonetheless, 21st January 2021 is going to go down in history books with the Sensex making it to 50,000. As you look back, Madhu, and track your journey into stock markets, tell us some of the big mistakes and the big wins that you've had in the market.
So, again, there are a lot of mistakes. Aisha, few of them which come in my mind is, again, as early when we start and we don't understand this whole complexity of the market, we all believe that making money out here is very easy. कोई टिप देगा, अपन शेयर खरीदेंगे और वो भाव ऊपर जाएगा. And sometimes in the bull market, all that happens, and it happens so quickly that we all start believing that, this is a very easy way out. So we also got into those kind of mistakes. We believed into all kinds of story which the management had to tell us in early part of our career. And plus, one of the things which I regret that, I personally identified many, many winners very early on. But A, I could not buy enough of them. B, I could not keep enough all those companies in my portfolio. So hopefully, over the next 10, 20 years, the markets will still give us a chance to correct those mistakes of really buying right companies, not really timing to the last penny, and have the courage and the conviction in the story to hold on for a longer period of time. In terms of winners and the moments which I cherish my entire career with Reliance Mutual Fund. From nowhere, the fund got created. We all of us worked. Sunil and the entire team worked as a team, and from 200 crores to 3 lakh crores. That was the most memorable part of my career. And at times I miss it. We made 100 times return as a team for investors of Reliance Growth Fund in 15 years.
Wow. What an incredible journey. And Madhu, we all learn from your learnings and the wisdom that you keep sharing with us and your viewers. Thank you so much for taking the time out, Madhu, and joining in. Ravi, great to have you as well and celebrate in this momentous occasion of 50,000 on the Sensex. In fact, you know what? We've not taken a break in a very long time. We've been busy in a celebratory mood. I'm going to take a very quick break, but come right back. We'll continue to dissect the markets and what's the way forward now. As we've conquered 50K, what lies ahead? We'll discuss that.